join live and discuss about price earning ratio. I know this is a kind of very topic which is kind of discussed so much at the moment, but I don't know whether we know the real understanding and how do I apply that. I thought I'll just cover that bit. It will not be a long video, but I thought I'll just come live and say hi to all of you. Those who are joining live, I was going to watch this video later. Now, I'm going to do a bit of monologue. I know otherwise I would have shared my screen and discuss that. But maybe I get an opportunity, I can share that screen as well to you with this video. Maybe I'll check that. Now, price earning. Okay. If you look at it, let me, what is price earning ratio? And as you can name itself says, it's in price divided by earning, right? Now what happens uh, in this case is, let's see, and this is what it is, right? Share price divided by earning per share, which is a PE ratio. Now if you look at the factors of share price, sometimes what happens, the share price goes up and earning per share. Earning per share, if you know, if you just give you a simple understanding, if it's a if a company's entire pizza and the share which you get out of that, and the company profit is entire pizza, and the share which you get out of that is piece of that pizza is earning per share. If let's say for example company has earned $100 of profit and it gives you and you have one share and company has 100 shares, then you got $1 as your share in that particular profit. Now they might keep that money for future growth and they give you some as dividends, right? And that is earning per share. So sometimes what happens is that share price keeps going up, right? Earning per share does up. That could be, what does it mean? It could mean A, that because there's a bit of an anticipation that earning per share will increase, so that's why price is going up. What happens in that case? The P expands, so the ratio will be higher number. What if the earning per share increases and price stays? Now I want you to tell me which particular stock today in India market or any global market you're doing where earning has gone up substantially, but price has not moved, right? And what does it tell? That tells you that hey, that you have a situation where the market participants, the collective wisdom of market participants, don't expect that the company to perform well. If you're joining this live, I would love to see your comments because I'm just making a quick video, random video. I've not announced it. I thought it'd be great, but hope you're getting understanding of this because this is a very important factor. If P is 100 of a particular stock, some stocks have gone up well ahead of valuation. So how do you define the valuation based on P? Right? So one is that you look at the company because it's more about earning, and that's a difficult part of identifying the earning of the company. And if you see some stocks like Dixon, which has now corrected a bit because of this market correction, has gone up too far on the price because market was anticipating that they'll have a lot of earning because of PLI, a lot of industrial activity going to happen or in India and the growth around it because of the uh, their um, their nature of business, which is completely a new segment which is coming up of electronic manufacturing. So you need to understand, how do I apply that? What you have to do is very simple. I do use this PE ratio to advantage. How do you use that? And only for long-term stocks because it can be a bit of a time consuming to do that exercise. And I teach this in Peaceful Weekend Investing cohort in very detail. And if you gonna like this video and put a comment, I'll probably make a quick video to explain that in detail because coming live, just sharing about the PE itself, just understanding what is the sweet spot for us. The sweet spot is where price is increasing, earnings also increasing. So if you apply this logic of when you are entering a stock, enter at see what price you enter, what not price, what PE ratio you enter. And then when you exit, what PE multiple you're exiting. That one simple thing, if you apply, then you know that you'll always try and beat the market in a way. Because, like, for example, taking a real example of Dixon, right? If things have gone too far, you understand the factor whether the price has moved too far or fundamentally they're expected to do earnings, right? So if you not, you can take some money off the table, because that could be an exuberance causing the price to go up. Because, as you know, there'll be a lot of noise around, chatter around in telegram groups, in media and everywhere, and that could result into the P multiple to expand. Okay, so I'm giving a very simple explanation. The PE, nothing but a price and earning per share, your share. Now, if both of them expand, then you are in a sweet spot, because that's where you're going to get multi baggers, right? But if price is expanding and earning is not expanding, then it's not a great place, and you need to be little bit of doing some homework, understanding what's causing this price appreciation. If price is not going up and earning is going up, in that says you also understand what is that market knows that you don't know. All right, so these are the key factors in it. And if you are enjoying this video, just give a thumbs up. And I can see Alicia. Hey Alicia, thanks for joining in. Can you put your question in? I can try and explain you what exactly your question is around. So I'm discussing around price and earning ratio, how I use it, and how you can work through that and see what is the entry multiple of P you are entering a stock, because that will help you understand what is the collective wisdom and what is the exit multiple. And you go and apply this, a very simple exercise, to some stocks. Probably, if I have to give you a name, no recommendation of buy and sell. Take example of I don't look at how many subscriber I do you have. I think it's thanks for asking that question. You can check it yourself if you want, but I'm just sharing my view here. If you have any specific question on the topic, I'm more than happy to answer that. And thanks for joining me live. Really appreciate that. So one is this: if you look at if I show you one example, though I'm doing a vertical video, just give you from my where are you based. If you type in comment box from where you're joining in, that'll be really appreciated, so I know that from where you're joining in. Irrespective of which market you are in, probably this will be helpful. Let me show you a good example. Just give a minute. If you have any questions, just type in so I can try and answer that while I'm just pulling up some charts, so walk you through. And good example here. So I'm sharing my screen just to give you perspective here. Now look at this stock, right? The price has moved from, and forget about the currency or things, price has moved from 2000 to almost like 18,000, right? What has happened to the P? Now P expansion, as you can see, the bars here are earning per share. Okay, so earning per share has also increased. At the same time, you had at some point you had a erosion on P ratio. The blue line is P ratio, right? At one point, the P ratio reached almost like of the this is on the left hand side is a P ratio like 100 and the earning per share, and now it's kind of correcting itself, right? So you have a situation where earning per share has increased and also the PE ratio also increased, which means the price also has increased for this particular stock along with the earnings, right? And same way you have the situation where earnings also has increased correspondingly. But if I look at another stock, and this is a stock which is, just to name it, is Dixon Technologies in India, and let's look at another company which is, I will look at, this is a good example to take to give you understanding. If you're joining live, do type in from where you're joining in city, so that'll be helpful. Let's look at the current PE is 30, right? And if you go in here, what is the average PE? Look at this. Now, the average PE is around 40. This particular stock is trading way below the average PE of the last 5 years. Now you see at some point there was a bit of an exuberance of, and P touch 100, right? And if you look at it, which month was it? January, after January 2021. And you look at it, what happened? Price also topped. Now, the beauty here is the price has stayed there. It has dongled around between 800 and 6,000 or thereabouts. And the PE ratio has come down because the earning, the blue bars, have gone up, right? Which means now earnings have increased to the high degree. So now you have earning per shares, which means you'll get a bigger pie, and you're getting the same company at cheap valuation. Now, the question is, you have to figure out whether this company will perform better, because right now market is saying, hey, I don't know what the future looks like. I'm gonna, not make you price correct. In this case, price stayed around the same levels, but earnings have gone up. Hence, the PE has contracted. Okay, if you type in here, PE has contracted, so that you understand this particular thing, just so that this is the most important aspect of understanding of how PE works, right? And same way, if I take another example of an Asian Paints, and these are all examples of India, but you apply this in any market, you should be able to get the same outcome. Let's take this Asian Paints, right? Now in Asian Paints, what happened? What is the PE? 46.2, right? But I go in here and see what is the price. Now price has fallen to, right now the price is around 2,262 Indian rupees, which is around that. But when you look at the PE ratio, it has contracted from where? Wow. So earning per share has gone up, but the PE has contracted. So hope you got the message here. So please, if you are understanding this, try and remember one thing, just to summarize this uh, um, you know, live session, is PE is important to some degree, but you need to understand what is entry PE and what is exit PE. In between, what is happening is price and earning. So try and break that down and try and do your understanding on that. Why did the price increase? Is it market anticipating the earnings to move up? That could be the case. Then you have a multi-bagger in hand. But then is this actually happening, the earnings? Because price always is a reaction to the earnings. Okay, price always follows earning. And price is going up, earnings are not going up, then there is a trouble in hand. You need to understand that it could be market experience, and you don't want any Burj Khalifa stocks, if if you're following my channel, right? If price is going up, earnings going up, great. You just ride the wave and make sure you are, tapping on quarterly reports and making sure the company is saying what they're doing. And in case the price is not going up and earning is moving up, then you might want to keep an eye on. Could be the possible that there's a next leg of rally might start, which is, we call it stage analysis. If you find this video useful, please do hit a subscribe button, give a thumbs up, and share with your friends and family. Till next video, this is Shivendra Bhatia signing off. Peaceful weekend investing to you all. Thank you. Bye bye.